Hey, real life traders from around the world. This is Jeremy Alexander Newsome. I figured I would change it up a little bit. I'm actually doing this market review during market hours. You guys might probably are getting it after market hours if you have not subscribed to our YouTube channel. But regardless, I wanted to simply thank each and every one of you for attending who did attend the Are You a Noob Class 1 for beginners last night at 9 p.m. Went phenomenal. I loved it. Loved the turnout. Super exciting. Incredible energy. And Thursday at 9 p.m. Eastern Standard Time, we will be doing class number 2, which we're focusing on risk mitigation. So, in my opinion, even though, yes, Are You a Noob? These are classes that are just phenomenal. So I would make sure to register. The Class 1 link is going to be in this email as well that I'm sending to you right now. So if you guys get a chance to check that out, you're more than welcome to. And I would love it if you want to share it. I talked in the last real life stock review on Monday about posting on the website. Well, that wish came true. You guys definitely posted. So let's go ahead and look at some trades that were requested. So QIWI was requested as well. Let's go through some of that analysis, and right now what I'm going to do is just simply draw some support and resistance lines. I'll hop over here, horizontal angle, we have one there. I'm going to clone that guy. Thanks so much, Jason, for helping me out with that. There's some resistance right there. And at the moment, that's probably all we need. We might could get one more down here, right about there. As a resistance level. And what I'm looking at on QIWI is the volume is a little low, right? It's not a million shares. That's really kind of my preference, is to have a million or more. But at the moment, we're at a very, very strong support on QIWI. So if we zoom in, you can see that we are really battling that support area, and it'll be very, very interesting to see how and if that does play out. In fact, we had a candle, black candle, 3 black candles in a row, and we're kind of pounding our head, kind of retesting old support, new resistance. So it will be interesting to see if that does fail. In the sense of if we kind of close below here, I would be more bearish than bullish, right? If we close below that support now that we have kind of retested and potentially could fail. I mean, the volume is picking up. Again, this is a trade that I won't do personally because the average volume is kind of weak. But if we do bounce off of here as a as a support, then I would want to kind of close above that black candle. So bullish entry 26.83 and bearish entry 25.49 if it does roll over. So it's kind of the pivot point right now in QIWI. It will be interesting to see how that plays out. So I'll go ahead and save that chart. Save as QIWIJM. All right, perfect. Let's go to Gopro here for a moment. Gopro is also requested. I looked at this one last night, and I really, really like the analysis that we did on Gopro together. We talked about and mentioned that this is likely some type of wave 4. So meaning this is probably a wave 3. So we could count 1, 2, 3. This is a 4 wave, in my opinion, for sure. Some type of triangle or flat, and we definitely could get into a wave 5, but we talked about a few days ago about a 62.50-60 bull put spread, and then hopping into a bear call spread if we roll over. Well, here was the more bearish and bullish candle. So if you got into that bear call spread and you're in the bull put spread on GoPro, most of you might be in an iron condor actually on GoPro. So overall, I still like GoPro longer term. It'll be interesting to see how and if it does pop out and see what happens out of this wave 4 action. It might make it all the way back down to this level. If it does and bounces, and get some reversal signals, we could be more bullish than bearish off of that support at about $64 on GoPro. I'll make sure to save that chart. GILD, a lot of people talking about GILD. Here is my intraday trigger. So I did like the bounce yesterday, the higher high and the higher low, kind of coming out of this little pattern right here, something like that. And we did make a higher high and a higher low. It did look more bullish than bearish to me. At the moment, though, I did keep my trigger above 104.18. From when we formed this Morningstar reversal pattern, which we never triggered. So if you did get into the trade bullish yesterday, your stop more than likely is down here somewhere. I think that's absolutely still an A-OK place to have your stop. Looks like you might be doing your stop celebratory dance, but that's okay. That's what stops are for, right? We never know which way the stock's going to work out. That's why risk mitigation is so important, and that's why I want to make sure you guys are in class 2 tomorrow at 9 p.m. Eastern Standard Time. So at this moment in time, I would actually go ahead and change this to a end of day trigger. Now I would wait for a close, and let's see how in fact and if we do close above it. If we do that tomorrow, I would be again more bullish than bearish on GILD. If we do start making some lower lows and lower highs tomorrow or Thursday, realistically, the 200 is probably a good target on GILD. Maybe we could buy the bounce off that location as well. Would be interesting to see how and if that plays out. As an update on Activision, I had a student saying, hey, can you update me on what's going on with Activision? Yes, Activision, we had a bullish entry, and we got stopped out today, just a few moments ago, right? Now, the beautiful thing is about trading, the trades that you get into, you always need to manage your risk, right? How much should you risk per trade? One risk unit. And if you are not familiar with the R strategy or risk mitigation strategy or how to mitigate your risk, and if you get into trade after trade after trade and you're profitable and one trade just wipes it all out, I really do suggest hopping over to class 2. Even if it's a beginning class, I think it's massively important for the basics of your trading. So yes, this trade went astray. That's okay. Right? 1 R loss. Next trade, moving on. No big deal. We recognize the opportunity. We mitigate our risk. And if it continues lower, if we do a little bit of this action and then we bounce, we could consider maybe being a little bit more bullish than bearish on Activision once again. So that trade didn't work. Beautiful. No harm, no foul. Love it. GMCR. So this was phenomenal. We were actually celebrating this yesterday in the trading floor. What an incredible analysis the students came up with. We were talking literally about this, and this. And I drew it on the screen, and my line was kind of over here a little bit and over here yesterday during the trading floor, but the length of the line was the exact same. It was a really cool aha moment that a lot of us had yesterday in the trading floor. But either way, on Green Mountain Coffee Roasters, we have been and are a little bit more bearish than bullish, at least to the 100, which is a nice little gap action right there. There's some gap, there's some support. We'll see how and if we do in fact bounce off of that. But ultimately, looking for one more, a little bit of a wave up, potentially a wave down, maybe as far as to the 200 simple moving average or approximately 125, which could be a good buying location on Green Mountain Coffee Roasters if we do indeed bounce. Students want to look at ACHN. ACHN, again, really interesting little stock, interesting little trade here. Really, really pretty gap. Was a retest gap. We did rest and we did retest. Formed a nice little triangle pattern. Broke out of that bullish right there. And now we're kind of continuing a little bit higher. This is quite a bullish gap, in my opinion, on ACHN. And if we were to go bullish today, market's open, I'll be more bullish than bearish pretty much now. The hourly chart shows some really, really good bullish buying pressure. And here's some resistance that we have kind of broken through. It appears that we're forming a little bit of a pennant pattern at the moment. So on ACHN, my thought process would be you're more than welcome to wait for a close or an intraday trigger. Well, if we trigger that intraday, so maybe sometime today, I would be more bullish than bearish. And as far as the stop is concerned, for a swing trade, right? This is a longer term trade. For a swing trade, the stock could be below that support, below that pivot at about 12.10. So that would kind of be your entry, and your target could be this is your stop value. Multiply that times 2, and you'll kind of get an area approximately right about there where you're looking to take some profit off the table on ACHN. So yeah, we're making higher highs and higher lows. This gap and this volume really is quite bullish. And in my opinion, I would be a little bit more bullish than bearish. So that's quite cool. WLDN. So this is one that my good friend Ron got in at 1530, and he was asking me kind of my thoughts about this one. The trend is definitely bullish, and I think really what Ron's looking for is maybe just some fib targets. So let's drop on a fib. Drop the fib. Dropping the fib. I'm in love with a fib. She likes it. She wants it. All right. There we go. That's a pretty decent fib. I'm concerned a little bit about how that broke down. So let me do one more retracement just to see if that subdivides well. It really doesn't. Interesting. Let's see if I move it to here. What I'm looking for, students, on this fib, and by the way, yes, real life trading, we do teach fibs for free under the Master of Trading section. I'm concerned that this breached and this breached a little bit a little bit too far. So I'm trying to snug it up with that one. So let me see if I bring it down to here, what it does. That's a little bit better. So maybe it's the black candle that I could adjust. I doubt it's the high, but it might be the high. Interesting. So pretty much right at the open of this candle and the open of that candle, I think that's the range. That makes more sense. So we got to bounce off of here. We got to bounce off of here. And now we're kind of trading to a target. So 1851 was and is a pretty decent target where we likely will trade sideways and probably pull back into the 20 exponential moving average. And if we bounce from there, 1948 and then 2045 would kind of be the ultimate targets on WLDM. Let's do two more. These are for Stan, and I think that'll be a really fun real-life stock review for Wednesday. BOBE he wanted to look at. He also wanted to look at OVTI. Let's check that out. OVTI. And the trading floor actually begins in 40 minutes. I'm excited to get ready for that as well. Where is Bob Evans. Okay. Bob Evans. Where is Bob Evans? Where's the price for Bob Evans? Well, I guess while Bob Evans is loading, let's go do OVTI. Omnivision Technologies. Omnivision, again, a little light on the volume, just a smidge, but let's go ahead and draw some of this action. We'll draw a support line. I'll clone it. I'll do resistance line right there. And it looks like to me that some people got trapped bullish right there on the false breakout. Fascinating. Let's see here. I can dig that. So that's really all we kind of need. And at this point, might be able to draw a trend line. Kind of come in here through here. Something like that is one, and that's kind of one right about there. I think that's pretty decent. So Omnivision, let's go to the long-term moving averages. See how the long-term moving averages look, and we're kind of playing and bouncing around the 100. We had earnings recently, so that's what this giant big black candle was. So I said people got trapped there. Some people probably did, but probably none of you, since we don't really actively trade over earnings, right? In this situation, I would be more bullish to neutral. I like the trend. I like the candles. I like the location of where we were at. We've bounced off the 100 once, twice. We could do it again. So I would probably consider either a bull put spread or a put sale 24 or below, which sounds like the temperature in Canada. 24 below. It's kind of cold in Nashville too, actually. That would be kind of my area of maybe doing a put sale or bull put spread. I don't really have specifically anything other than that to kind of look at in regards to what I would do. So interesting to see how it plays out. But yeah, I think it kind of continues a little bit higher. More bullish than bearish, but more bullish than neutral. So I would probably consider some bullish non-directional trade on Omnivision Technologies. And let's see if I can get Bob Evans to load. BOBE. Bob Evans. I haven't eaten at Bob Evans in forever. And by forever, I mean very, very long time. Interesting that the Dow's not coming out. Let's see if I can reset the chart. Reset chart. There we go. That was interesting. Ooh, what a beautiful gap that was. Wow. Again, daily volume a little light. That's at 297. But this is a beautiful, beautiful gap and go, ladies and gentlemen. This is something that we're going to be talking about. We'll probably be looking at this one often today in the trading floor. But, imagine if you bought somewhere in this area. If you bought somewhere in there, especially yesterday, how are you feeling at the open of the market today? You feel like you just got punched in the face by the stock, right? Yeah, so it's a gap and go. It's gapping down. So anyone who bought, let's say anyone who bought at the blue line or above is being trapped. They're losing money at the open of the market. So what are they forced to do? They're forced to sell to close. And all that selling pressure creates a giant black candle, which is a profitable candle for those who day trade. So Bob Evans, a little light on the daily volume. Probably wouldn't have taken this trade myself, but it is a good opportunity recognition and as far as the gap is concerned. And if I was trading Bob Evans, I would have a little bit more of a bearish tint to my analysis based on this gap rather than a bullish. So I do foresee some lower lows and lower highs in Bob Evans' future, even if it's moderate. I would be a little bit more bearish than bullish. Ladies and gentlemen, hope you enjoyed this mid-afternoon real-life stock review. I'll be doing another one on Friday, and that one I will be doing from Gainesville, Florida, or I'm going down to meet some friends. I'll be meeting a real-life trader down there as well, who actually goes to UF. He's a younger guy, which I'm super excited about. And I have a party of a friend and meet up with some people, and it'll be a good time. So anyway, I'll see you Friday if I don't see you tomorrow in the class number 2 under the newbie section. I'm excited. Ladies and gentlemen, thanks so much for watching. You guys absolutely rock. And until next time, remember, love life, live life, and trade it. See you guys later.